Throughout the first half of this year, the San Ramon real estate market has experienced a noteworthy trend of consistent, albeit slow, growth, reflecting the steady and gradual rise in property values and market activity in the region. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, July 7th. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone that is looking for a house that you will love to call home. The current inventory is 21 homes, down from 23 last week. The average asking price for those homes was $2,301,000, which is up from last week's average of $2,267,000. 6 homes, asking an average of $1,620,000, went pending this week. That is more pending homes than last week's number of 1, with a higher average asking price from last week's price of $1,425,000. A total of 8 homes sold this week, with an average sales price of $2,126,000. That average price is up from last week's average of $1,625,000, and the total number of sold homes was higher than last week's 3. And now that we have analyzed the market's performance over the past week, I am changing up the format a little bit this week. We have made it through the first half of the year, and I think it would be good to check in on how the market has looked in the first 6-month period. Before we do that, if you find this information valuable, we encourage you to subscribe so that you won't miss out on future updates. And why not share this with a friend too? Everyone deserves to be in the know about the local real estate market. All right, let's take a look at the trends of the first half of the year. The first half of this year has proven to be an exciting time for homeowners. Unlike the turbulent market of the previous year, which saw extreme highs and extreme lows, the San Ramon real estate market has experienced a consistent upward trajectory, providing a sense of stability and confidence to those navigating the housing market. While the broader economic landscape has been riddled with concerns and challenges, the housing sector has emerged as a ray of hope for individuals seeking a place to call their home. The average closing price in San Ramon has seen a nearly 12% rise, increasing in value since the start of this year. On January 1st, the average closing price was $1,716,000, and at the end of last month, the year-to-date average price was up to $1,921,000, which is a change of $205,000. In this weekly series, we discuss several metrics that shed light on why the market has experienced this consistent increase in value throughout the year, despite the presence of other volatile economic activities. The primary factor driving this upward trend is the limited inventory available in our highly sought-after destination city. Multiple factors have led to a decrease in the number of homeowners choosing to sell, resulting in lower inventory. One of the most significant factors is their current low interest rates. Homeowners who decided to purchase another property and secure a new mortgage risk losing favorable rates. In recent years, almost all homeowners with a mortgage have taken advantage of a historically low interest rates, ranging from about 2.75 to 3.5%. by refinancing their loans. As a result, the market has seen a scarcity of available homes, with fewer than 30 properties on the market at any given time throughout the year. This inventory level is nearly half of what we typically observe in a neutral market. But the low inventory alone doesn't automatically guarantee an increase in property values. However, the combination of San Ramon's reputation as a safe and desirable place to live, along with its exceptional schools and growing variety of shopping and entertainment options, it has generated high demand for housing. This sustained demand has resulted in a consistent upward pressure on home values. To gauge the overall market health, we turn to another key metric, which is the inventory turnover rate. The year began with a relatively slow pace, and there is a brief downturn in early March. However, aside from these instances, the market maintained a consistent turnover rate above 1%. or 100% throughout the first half of the year. After a sluggish end to 2022, it was expected to see that slow start that we saw here in January. However, from early January through February, the market experienced steady gains, reaching a peak with a robust rate of over 2 times turnover each month. During a brief 2-week period, there was a slight decrease in the turnover rate, but the market quickly rebounded and transitioning to a highly favorable seller's market. It dropped again around April 10th, an unexpected drop, which was unexpected, but it didn't last for as long as we were thinking it might. Despite this, the turnover rate remained above the 1 time per month benchmark, and starting in May 1st, we observed a steady and gradual increase, with the market now approaching the 2.0 level once again. When we evaluate the market based on this particular metric, it becomes evident that the first half of 2023 has shown a remarkable strength. In fact, when compared to similar periods over the last 24 years, it falls within the top 20% in terms of overall market performance. This indicates that the San Ramon real estate market has exhibited exceptional resilience and positive momentum throughout the first half of the year. Due to the combination of low inventory and high demand, we have witnessed a resurgence of multiple offers and closing prices that exceed the listing price, which had become the norm in the recent years. It is important to note that when multiple offers are present, sellers and their agents carefully consider market trends when setting the listing price. For example, if houses are typically selling for 4% above the listing price, agents may recommend listing the property approximately 2% below that expected selling price. However, if a seller decides to list the house at the anticipated selling price, it's unlikely that buyers would be willing to pay that premium of 4% over, and this usually means that the house will sit for a little bit longer and sell for under the asking price. This highlights the crucial role of strategically setting the listing price to effectively navigate the dynamics of the market. This chart clearly illustrates a sluggish housing market at the start of 2023. During this period, properties were selling for approximately $80,000 less than their listing price, indicating a favorable position for buyers in the market. However, as the year progressed, we observed a significant shift in the market dynamics, and by the end of February, properties were selling at their full listing price, signaling a transition towards a more balanced market. This recovery showcases the resilience of the market and the increasing confidence among buyers and sellers as we moved forward into the year. As the year progressed, we witnessed a further shift in the market dynamics, leaning heavily in favor of sellers. By June, most homes By June, most homes were selling for prices that were nearly $100,000 above their asking price, indicating a significant rebound from earlier market conditions. However, it is crucial to interpret this raw data with caution. These figures represent what we refer to as a lagging indicator. In essence, the reported data reflects agreements that were finalized between 30 to 60 days prior to the actual closing dates. Therefore, although the chart may suggest that the market peaked in June, it's more likely that the peak occurred around mid-April. It's important to consider these nuances when analyzing market trends and making informed decisions. This deduction is further supported when we refer to the previously discussed market turnover rate. That chart reveals that the highest turnover rate was April 10th. Suggesting that the peak of aggressive bidding and heightened market activity likely occurred around that time. It underscores the significance of considering the time-lagged impacts when interpreting the data to gain a comprehensive and accurate understanding of the housing market's performance and trends. By taking into account these temporal dynamics, we can better analyze the market and make informed assessments of its fluctuations. Now let's shift our attention to the average closing price trend during the first half of the year. While not a perfect reflection of market strength, it generally aligns with the appreciation or depreciation trends in the market. However, it is important to consider that an unusually high volume of either expensive or inexpensive homes sold during a specific period can temporarily skew these numbers. Therefore, it's crucial not to overly focus on weekly shifts in sale values. Instead, we should pay attention to identifying the broader trend line over several months, as it provides a more reliable indicator of the market's direction. Similar to the previous trend we discussed, tracking the variance between a home's listing and final sales price, this chart also reflects a lagging indicator. These indicators capture decisions that were made approximately 30 to 60 days ago prior to the final transaction showing up on the market information. With this understanding, we can trace the market revival back to the end of 2022, reaching a significant peak in late February. Right over here, late February. A significant peak in late February. There was a brief downturn in the beginning of March, lasting approximately 3 weeks. However, a rapid recovery followed, and the market has consistently demonstrated strength ever since. I hope this year-to-date 6-month update was helpful, and I appreciate you joining me on this adventure. If you have any specific questions about navigating the market to buy or sell a home, don't hesitate to drop a comment below or reach out to us directly. We're here to guide you every step of the way. And if you did find this information helpful, share it with your friends, and don't forget to hit the subscribe button and so that you'll always be up to date on the latest real estate news here in San Ramon. Thanks again for joining me. Have a safe weekend, and we'll see you next week with a new update.